Greetings everyone, we are from the course STQA2223 Basic Accounting and Finance, and today we are here to share about the financial statements of 4 companies. As can be seen here, our group members include Farenayla Aesya, Loo Wing Lam, Cheng Sia Chang Ann, Heng Sheng, Rusnita Allyiana, Amani, and Rasyidah. The sections that we will go into are introduction, objectives, methodology approach, result and discussion, and finally conclusion. So first, we will start with introduction. We have chosen 4 companies from different industries that are listed on Bursa Malaysia. The first company that we have chosen is TENAGA National BERHAD with stock code 5347. This is the largest electricity utility in Malaysia, and their main business activities included generation, transmission, and distribution of electricity. Next, GENTING Malaysia BERHAD with stock code 4715. It is one of the leading leisure and hospitality corporations in the world. Third, PHARMANIAGA with stock code 7081. It is one of Malaysia's largest listed integrated pharmaceutical groups. They are also involved in various segments of pharmaceutical value chain, included research and development, manufacturing of generic drugs, and others. Lastly, HTK Capital BERHAD with stock code 7105. They are engaged in the business of investment holding and the provision of management service. This core business included property investment, trading, and development. They also invest in food and beverage business. Next is the objectives part. There are 3 objectives for this group project. The objectives are: first, to evaluate and compare the past performance and current position of the companies as an indicator for external users in making economic decisions. Second is to determine the capacity of the companies to pay off short-term debt obligations in a timely manner and margin of safety. And lastly, to assess the ability of companies in handling long-term financial obligations and generating profits from their operation. The third section is methodology approach. We will be doing horizontal analysis, vertical analysis, and ratio analysis. Ratio analysis included working capital, current ratio, debt to assets ratio, debt to equity ratio, net profit margin, and return of assets.
Now, moving on to result and discussion. Horizontal analysis. Here is the intercompany comparison for total asset. From the analysis on the statement of financial position for each company, we can see that all companies are having a rise in 2019, 2020 and 2021, except for PHARMANIAGA BERHAD, slightly decrement of 0.46% in 2019, and GENTING Malaysia BERHAD, a decrement which is 12.39% in 2020. TENAGA National BERHAD had the largest changes in the total asset among this company, which is an increment of 37.74% in 2019, while the second largest changes is PHARMANIAGA BERHAD, which is 35.56% in 2021. Besides that, PHARMANIAGA showed that the smaller changes in the total asset among this company, which is a decrement of 0.46% in 2019, and the second small changes is TMB, which is 0.47% in 2020. For the comparison of total liabilities, we can see that all the companies are having a rise in 2019, 2020, and 2021, except for GENTING Malaysia BERHAD has a decrement of 19.5% in 2020, and HTK BERHAD decrement of 36.28% in 2021. PHARMANIAGA had the largest changes in the total liabilities among this company, which is an increment of 96.10% in 2021, while the second and third changes are TMB, which is 67.37% in 2019, and STQA 64.79% in 2022. Besides that, PHARMANIAGA also showed the smaller changes in the total liabilities among these companies, which is an increment of 0.02% in 2019. For the part of total equity, we can see that all the companies are having a drop in each year, except for Genting Malaysia Berhad, which is slightly increment of 0.62 in 2019, and HCK Capital Group Berhad increment for every year, which is 1.65% in 2019, 0.77% in 2020, and 70.11% in 2021. PHARMANIAGA had the largest changes in the total equities among these companies, which is a decrement of 35.36% in 2021. Besides that, Genting Malaysia Berhad showed the smaller changes in the total equities among these companies, which is an increment of 0.62% in 2019. For the part total revenue, the bar chart shows that all companies having a decrement in 2020, which is 13.72% for TMB, 54.99% for Genting Malaysia Berhad, 22.05% for PHARMANIAGA, and 33.43% for HCK Berhad. In 2019, all companies show an increment except for the PHARMANIAGA, a decrement of 61.01%, whereas in 2020, all companies also show that the increment, except for Genting Malaysia, show a decrement of 51.09%. PHARMANIAGA had the largest changes in the revenue among these companies, which is a decrement of 61.01% in 2019. Besides that, TMB showed the smaller changes in the revenue among these companies, which is at 38% in 2019. Last but not least, for the comparison of net profit, the bar chart shows that all companies are having a drop in each year except for the TENAGA Berhad Malaysia, which is increment of 36.15% in 2020, HCK Berhad increment of 60.97% in 2020, and Genting Malaysia Berhad increment of 83.34% in 2021. HCK Berhad had the largest changes among these companies in the total profit, which is a huge decrement of 1,092.86% in 2019, and it changed the trend from net profit to net loss due to the change just that more than 100%. Besides that, Genting Malaysia Berhad showed the smaller changes in the total net profit among these companies, which is a decrement of 12.89% in 2019.
Vertical analysis. For analysis for statement of profit or loss, intercompany comparison of net profit, there was a fluctuating trend from 2018 to 2021 from each company. In 2018, PHARMANIAGA Berhad had the largest percentage of net profit with 79.3% of total revenue compared to the other three companies. In contrast, HCK Capital had a net loss with 3.28% of the total revenue. In 2019, although PHARMANIAGA net profit decreased to 41.03%, it still had the largest percentage among the others. STQA Capital had a significant increase from loss to gaining profit with 20.23% of total revenue. In 2020, HCK Capital took the highest percentage of 48.91% of the total revenue, whereas Genting Malaysia had a significant decrease to losing with 9.6% of total revenue. In 2021, all four companies had decreased, and Genting Malaysia kept losing with 33.95% of total revenue. For analysis for statement of financial position, intercompany comparison of non-current assets, in 2018, the lowest total of non-current assets was from HCK Capital Group Berhad with 0% of total assets. It can also be seen that the highest total non-current assets recorded was from Genting Malaysia Berhad in 2020 with 93.06% of total assets. Overall, STK Capital Group Berhad recorded the least proportion for non-current assets throughout the 4 consecutive years. TENAGA Nasional Berhad was the only company that increased its total non-current assets proportion from 81.33% in 2018 to 89.16% in 2021. Meanwhile, on comparison of total current assets, our analysis implies that TENAGA Nasional Berhad's total current assets showed a downward trend from the year 2018 to 2021 with 10.84% of total assets. Genting Malaysia Berhad and Farmaniaga Berhad showed inconsistent trend on their total current assets proportion throughout the 4 years. HCK Capital Group Berhad's proportion of total current assets also showed decreasing trend from the year 2018 to year 2021. However, this company had the highest average proportion of total current assets among the 4 companies. For comparison of total liabilities, TENAGA Nasional Berhad had the largest proportion of total current liabilities compared to another 3 companies from 2018 to 2021. This company had the highest percentage of total liabilities in 2021, which is 74.8% of total equity and liabilities. On the other hand, HCK had the smallest proportion of total liabilities compared to another 3 companies from 2018 to 2021, with the percentage of below 1%. In conclusion, Farmaniaga and TENAGA Nasional Berhad had an upward trend, whereas Genting Malaysia and HCK had an inconsistent trend. For the comparison on total equity of the 4 companies, TENAGA Nasional Berhad and Farmaniaga Berhad showed a decreasing proportion of total equity from 2018 to 2021. Meanwhile, Genting Malaysia and HCK's total equity analysis showed an inconsistent trend of proportion throughout the 4 years. Among the 4 companies, HCK showed the highest proportion of total equity, which maintained above 99% of total equity and liabilities from 2018 to 2021. Besides, TENAGA Nasional Berhad had the lowest total equity average with proportion in comparison with the other 3 companies of total equity and liabilities in year 2018 to 2021 respectively.
Now, I continue to ratio analysis. By referring to the graph, working capital of TENAGA Nasional Berhad decreased and turned negative in 2020 and 2021. The working capital for Genting Malaysia Berhad has fluctuated over the 4 years, but it remains to have positive working capital, while Farmaniaga Berhad remains negative working capital throughout the 4 years. In comparison of the 4 companies, HCK Capital Group Berhad showed the best working capital trend because it has a stable positive working capital with a small increasing trend from 2018 to 2021. Next, current ratio. HCK Capital Group Berhad has the highest current ratio among the 4 companies. However, its current ratio is too high, which may indicate HCK is leaving excess cash unused rather than investing in growing its business. The current ratio of TENAGA Nasional Berhad decreased continuously until less than 1 during 2020 and 2021, while Farmaniaga Berhad has current ratio of less than 1 for the 4 years. Therefore, Genting Malaysia Berhad has the best current ratio of more than 1 among the 4 companies from 2018 to 2021. Based on the graph of debt to assets ratio, all the 4 companies have debt to assets ratio less than 1. TENAGA Nasional Berhad has the highest debt to asset ratio compared to the other 3 companies and increased slightly from 2018 to 2021. In contrast, HCK Capital Group Berhad has the lowest debt to asset ratio, which means the company has the lowest financial risk among the 4 companies. Next, debt to equity ratio. The graph showed that debt to equity ratio for all the 4 companies had increased in 2018 to 2021. TENAGA National Berhad had the highest debt to equity ratio, while HCK has the lowest debt to equity ratio. Although a lower debt to equity has a lower risk for shareholders, this may indicate that the company is not appropriately financing the asset with the debt obtained and would result in lower returns. So, Genting Malaysia Berhad and PHARMANIAGA Berhad are considered to have a healthier debt to equity ratio. Net profit margin. All the companies show different trend in their net profit margin. Both Genting Malaysia Berhad and PHARMANIAGA Berhad show a downtrend of net profit margin, but Pharma better than Geng M, as the company still able to maintain a positive net profit margin in 2021, while Geng M start to face a negative net profit margin starting from 2020. Overall, TENAGA National Berhad has the most stable net profit margin, which means the company has a mature way of generating profit from their revenue. Lastly, return on asset. Genting Malaysia Berhad and PHARMANIAGA Berhad show a downtrend of return on asset, but Pharma better than Geng M, as the company still able to maintain a positive return on asset in 2021, while Geng M started to face a negative return on asset starting from 2020. Overall, TENAGA National Berhad has shown the most stable return on asset, which indicates that TNB has a mature way of generating income by using asset efficiently.
So for the conclusion, we can summarize the report as a whole. From the analysis above, we can observe that TENAGA Nasional Berhad has the best performance among these companies. Although they do not have any substantial improvement, we can understand that in facing the COVID-19 pandemic outbreak, they still managed to maintain their company in healthy financial status compared to the 3 others of these companies. We can see that the stability of this company is better than other companies. So TENAGA Nasional Berhad will be a safer choice for investor to maintain their portfolio, and profit can be earned from their economic decision. So that's all from our group. Thank you.